Welcome to this edition of Diligent Institute's Inside Today's Boardrooms. I'm TK Kerstetter, and I'll be your host for today's show. We're going to be talking about building an effective audit committee and external auditor relationship. And joining me to have this discussion is Tom Aaron, who's a board member with Cincinnati Financial Corp and AirSculpt Technologies. Welcome, Tom.
Thank you for having me, TK.
So, it's no secret that that's a very important relationship between the audit committee and the external auditors. And the reason that I'm happy to have you on the show is you have literally sat in hundreds of audit committee meetings, whether that's by, currently being a board member and an audit chair. You did a term as a CFO with a large corporation, and then you were also a partner with a Big Four firm specializing in audit and being the partner on some, again, big accounts. So you have sat on every side of the table that you can possibly sit on. So you're a perfect guy. And I think as an opening question to you would be, to have a good foundation for an effective relationship between the two, what should audit committees expect from external auditors?
Well, I think that is the most important question when you talk about overall relationships, TK. And I would probably put it in three buckets. And one is pretty obvious, but it comes in a lot of flavors, and that is communications. And I'm talking about communications that are regularly scheduled in advance of meetings to avoid surprises that may come up, and ad hoc is necessary as you're going through the audit process. The communications really need to be timely and substantive. So you really don't want to build up a brand of having frequent, inconsequential discussions. You need to take advantage when you have the time together with the audit committee. A lot of times that will take place between the audit committee chair and the audit partner in advance of meetings. And then lastly, on the communication, I'd say it really needs to be transparent and really sharing all information that you have, again, focused on material items, what is important to the audit committee and the auditor. So communication would be first. The second item, and this is the same expectation as an audit committee member I'd have of my management team, but when the management team's presenting, they need to share what it anticipates having, the areas that it anticipates having challenges or where it is having challenges. So it can discuss with the audit committee the challenges, why they're challenges, what they're doing to square off against those challenges. And I think that's where an audit committee can be most effective in working with the auditors and the management team to really, hopefully, proactively deal with tough situations. And then lastly, the audit committee ought to expect the audit firm to share insights. And that could be anywhere from best practices with the committee, what's going on in the industry. But a lot of times they want to know how does our company benchmark against other companies? And that is useful to them. And it's something that generally the auditors are going to have experience repetitions in that same industry, and they should be able to share insights without giving away any confidential information, but that's of high value to audit committees.
So obviously an effective relationship has to work on both sides, not just one side. So let's flip this question around and let's ask what external auditors, should expect from the audit committee. And you touched on that relative to the communication, going both ways, but what else should they expect should the auditors expect from the audit committee, or even specifically from the audit chair?
I think one of the most important areas is for the audit committee to share their expectations. And that goes beyond the chair. That goes for the entire committee. So they may have expectations around communication, which I touched on a few of those, but they may want to share with you the expectations they have on how you deliver the audit, how you report out, when they want to hear from you. It could be, and for an auditor, a lot of times as issues come up, you're working with the management team to deal with those issues. You might have an audit committee that wants to know about all of those items that are out of the ordinary that you're working on with the management team. They might have, just as an example, a company and a board may have recently asked the management team to focus on cash flows and improve cash flows. And if they could share with you that the expectations in connection with the audit, we want to hear any areas that you identified where we can improve how we perform with respect to improving our cash flows. You could have expectations about training they want to have, whether it's on industry or developments with the board. And then also about sharing observations from the audit, some of the qualitative, their responsibilities that the auditor has with auditing standards, but they may want to go beyond some of those and get some qualitative views on how the audit went. I think that the second thing an audit firm ought to expect is asking the audit committee to keep a broad lens on the audit process. A lot of the times in audit committee, these are coming up on deadlines, whether it's a quarterly review or a year-end audit. And if issues come up, they default to the check the box they need to get done in time for the quarter or the year end. And a lot of times the committee needs to back up and look more broadly at the results of the review or the results of the audit and how that may relate to some of the broader issues that they're working with, and really go beyond a check the box mindset. This is same for the auditors, but the audit committee. And then lastly, and I think this is a timely topic, the expectation would be that they have their antenna up on risk management. You look at some of the issues right now with the last couple of years, human capital with labor shortages and remote work, supply chain resilience, inflation, interest rate environment, war in Ukraine, not to mention the cyber developments. You're asking the audit committee, again, go beyond the audit committee charter and look at some of the other developments. Generally, risk management is in their purview, and you want to make sure that they are up to speed and the latest with what's going on so you can have discussions with them regarding the audit and then more broadly for the risk environment for the company.
So, Tom, what would you say, after hearing both sides, again, there's a lot of communication that has to occur, and that sounds like that might be issue number one, okay, from both sides of the fence. But from your experience, what is the most common mistake audit committees make that presents challenges to the relationship rather than opportunities?
So I wouldn't call these common. I would just say they're more frequent than other, I'd say, missteps where audit committees have opportunities to really grow the relationship and come out stronger. But a lot of times late in an audit or a review, management might be busy with things that are just recent changes. There could have been a recent acquisition, changes in assumptions around estimates. A lot of times when interest rates increase, that changes the estimates that come out. If you've got new or changed revenue arrangements, revenue recognitions can change, extrapolated errors that the auditors might find in internal controls, material weaknesses, or significant deficiencies. These ought to all sound familiar to an audit committee. When these come up late in the game, a lot of times an audit committee has been briefed by the management team. And tensions could be a little bit higher because there are deadlines and so forth, and nobody likes to be on the clock when they have to resolve these matters. And I would say that the most mature, best performing audit committees, they understand the process that they need to get through to meet their audit committee charter, for the auditors to complete everything they need to do within the audit standards to resolve the issue. But it's also up to the audit committee to understand these items, what was the root cause on these items, and so forth. A lot of times when they first hear from management, they're a little bit biased towards what they heard from management. That might not be the entire story. So a lot of times they might be on the defensive with the management team, and that really doesn't contribute to resolving these and then doing what we need to do for timely filings, and then maybe coming back and say, okay, how can we improve the processes where we don't run into those again? But I would say that, like I said, the best performing audit committees are the ones that understand that. They keep you on track with what needs to get done for the audit. And then some of the other points that need to be worked out on the relationship or the processes whether management or the auditors. Get to that afterwards, and because a lot of times that just causes distractions you really don't need to resolve those items.
So, Tom, I want to thank you. This has been very valuable to anybody that is involved in making sure this relationship is symbiotic on both sides, and your guidance and advice to our viewers will be very helpful. So I want to thank you for taking the time to join us.
My pleasure, TK.
And that will conclude this edition of Diligent Institute's Inside Today's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic that'll help you be a better board member or committee member. So we'll see you then.